We're seeing the federal government look to impose a reservation policy. Those details are still to be worked out this year, but what the industry is looking for is to see whether for the first time the government will actually hit Santos's LNG project, because it's got off largely scot-free over the last 10 years.
Welcome. Was the big drop in profit primarily the result of softer oil and gas prices?
Yeah, softer macro conditions saw the second half of last year's all our metrics obviously being lower, flowing down into the NPAT line. But it's also because the Barossa project, which was originally due to start later last year, was suffered delays, and so never actually started until 2026, and so Santos didn't get the benefit of Barossa contributing to revenues in 2025.
We keep hearing that geopolitical tensions and the drive to build out artificial intelligence will keep energy demand high, even with increasing renewable capacity. But are prices for producers being kept in check by extra supply coming online internationally?
Well, fundamentally, we still see demand growing, but the issue is that supply is growing even faster than demand. We're seeing that from new supply sources, Brazil, Guyana, Canada, and the US growth. But in addition to that, OPEC started to unleash a lot more supply and more rapidly unwind its cuts that were originally put in place during COVID times over the course of 2025 and continuing into this year. And so that supply-demand balance has suggested a softer outlook, but the geopolitical risk tensions, first with Venezuela, which saw some disruption to supply, then with some Ukrainian attacks on Russian oil export infrastructure, and now with the military build-up in the Middle East with the potential strike on Iran, that is keeping a risk premium of $5 to $10 a barrel on what the oil price otherwise would be on fundamentals.
Saul, Santos has been criticised for prioritising exports of LNG to international markets instead of Australia's own domestic market. How sensitive is it to the idea that it has exposed Australian consumers to higher energy bills?
Well, it's a very sensitive topic for the industry, but Santos in particular. The 3 LNG projects in Queensland are often faulted for connecting the domestic market prices to international prices, but the truth is 2 of the projects already deliver a lot of gas into the domestic market in addition to their exports. It's the 3rd project, the one that Santos operates, that sucks gas out of the domestic market to export and has been the biggest culprit of the LNG exporters in this regard, in addition to a multitude of other factors that have pushed up prices for gas on the East Coast. Now we're seeing the federal government look to impose a reservation policy. Those details are still to be worked out this year, but what the industry is looking for is to see whether for the first time the government will actually hit Santos's LNG project, because it's got off largely scot-free over the last 10 years, despite the fact that it is contributed to the problem more than the neighbouring projects. And many in the industry, particularly the oil and gas companies in the neighbouring projects, are pushing the government hard to share that burden more fairly and more equally so that it will target Santos this time around. But Santos's arguments very much evolve around the risk that it could pose to contracts with our international trading partners in Malaysia and Korea, as well as trying to claim that some of this domestic supply that they're pulling out of the market was only developed for that export market. Now, I think that argument's tenuous in some cases, but that's an argument they're nevertheless making as the fierce lobbying regarding this continues over the next coming months.
The CEO, Kevin Gallagher, said Santos won't renew third-party contracts in international markets, freeing up more supply for the Australian market in 2027. Is that Santos trying to get ahead of the government's prospective gas reservation scheme?
Yeah, I think we're likely to see some kind of proactive concessions regarding that, and potentially also not renewing the one of the LNG contracts that expires around 2030, but there's an option to renew. But from the industry perspective, from the other players' point of view, they're quite concerned about that that's still going to grandfather a material amount of domestic supply over the next 5 years, particularly from the Cooper Basin joint venture, which is taking a significant amount of gas that could otherwise be going to the domestic market to export.
The CEO announced 10% of the Santos workforce will be cut and there'll be a strategic review of the company's Australian portfolio. What is Santos looking to achieve?
Well, with the Barossa and Pikka project starting up this year, the Santos portfolio does look quite different. It's much more internationally and export focused. And so the Santos legacy business, which is what Santos really mainly was as a company 15, 20 years ago, that could be a better candidate for divestment. Now, Santos has reviewed these assets before. The difference now is there might be more appetite by Santos to make some hard decisions given their other projects in the portfolio will be up and running. And second of all, I think the market's had a lot of ESG headwinds about doing M&A, particularly for later life assets over the last few years. But there's a bit more appetite now within the oil and gas space to do acquisitions. So that could perhaps see finally a bit of a window of opportunity for Santos to make some harder decisions and divest assets such as its Western Australian interests, Cooper Basin joint venture and projects, or potential projects, I should say, like Narrabri.
In the last decade or so, Santos has seen 3 bidders, including Woodside, exit takeover talks. Do you think after this review you could see any one of those bidders take another look at the company?
Well, the issue Santos faces is it's had 2 very sophisticated, well-informed bidders in Woodside and XRG take a look under the hood over the last 2.5 years and then suddenly walk away after what they found. Now, that raises a bunch of red flags as to what the underlying business looks like under that hood. Now, some of those red flags might have to do with the legacy business. So to the extent that that could be hived off, the export-focused business might then be more attractive to international suitors. But I would caution, I do think some of the risk on the valuation of Santos might actually come from its internationally focused business, like in Papua New Guinea, which, while a very strong tier 1 asset, still does not necessarily mean it is valued as highly by the industry as the market might at the moment.
Lastly, the federal court yesterday threw out a greenwashing case brought against Santos by a shareholder advocacy group. What did it have to say, the company have to say today about its decarbonisation progress?
Well, Santos has had some quite aggressive 2030 targets and actually met them due to the delivery of its Moomba CCS project and met them early. But Santos has faced activist litigation from various groups over the last few years. All of that litigation has ultimately failed and proven frivolous, but the issue that the industry faces is a lot of this activist litigation is ultimately about drawing attention to matters and delaying things rather than necessarily winning on the merits of the case. And I think this is another example of that, and I don't think this litigation is necessarily going to let up going forward for new projects that Santos pursues.
Saul Kavonic, thank you for joining the program.
Thank you.